Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is Thursday, April 11, 2013. Thank you all for tuning in. Let's jump right into the charts here. We'll start off with the usual S&P 500 E-mini futures. Futures were flat just a couple of minutes ago, or I should say a minute ago, and now they are getting a little bit of an uptick after the weekly jobless claim report came out. Looks like jobless claims declined by 42,000 to 346,000. Either way, markets are getting a little bit of a blip higher. We'll see if that continues. Again, pretty big rally yesterday, especially in the Nasdaq. It was more of a Nasdaq-led rally yesterday than anything else. So solid move yesterday for the Nasdaq to the upside. Today, markets look to be pausing or stalling a little bit, but we are upticking now after the weekly unemployment data. I think traders right now want to be on guard a little bit. Against good news. If you get good news, that's what's going to ultimately cause the stock market to go down. I know that may sound crazy, but if you just rewind the clock a little bit and go back to last Friday's monthly job number by the U.S. Labor Department, the number was horrible. It was dreadful, and the stock market actually rallied off of the low of the day because many investors believe that quantitative easing will either increase or will continue for a longer period. And it all comes down to money printing. Ultimately, money printing leads to massive inflation, but right now the markets are still in Jubilee mode, and bad news is good news because it means more money printing is going on. This is something I think traders and investors ultimately understand, but whoever wants to leave a good party, that's what it comes down to. But ultimately, the longer you stay at the party, the more you drink, the worse off you are the next day, and that's ultimately where this will be heading. The same thing is going on in Japan. Japan just is inflating their market on a daily basis. Again, the Japanese Nikkei 225 was up another 2% last night. I don't think I've ever in my lifetime have seen a move this dramatic this quickly, but it is what it is, and right now, money printing to the gills. It looks like Australia is looking to print more money as well. So, that market, could be due for a rebound soon because it looks like the rumors are that they're going to start to print money also. So, I mean, every central bank around the world is just printing money. When the party ends, though, it's not going to be a pretty picture. But right now, the markets are rejoicing. They love inflation. They love money creation. They love the easy money. And that's what we're getting at the moment. Whether we need it or not remains to be seen. But according to Ben Bernanke, we do. And according to the Japanese central bank, they certainly do. So this is what it's all about. It doesn't matter if you have a bad stock or anything else. So until that ends, traders should just look for the best patterns to own. All right, let's take a look at a few other things out here in the news today. Well, first off, we'll go to the Asian markets, and I talked about Japan being up 2%. The Shanghai was actually negative by about 0.25%, not a big deal. The Hang Seng was up 0.3%. The Indian Bombay Sensex index was was up 0.7%. Singapore was up about 0.5%. In Europe today, European markets are all higher across the board. Spain is flat, the IBEX 35. So no panic out there yesterday. Yesterday's move in the U.S. Certainly set the tone. You had a big move up in Europe as well, and everything is holding firm this morning. Take a look at gold this morning. Gold is up about $2 to $1,561 an ounce. Gold was hit pretty hard yesterday on a Goldman Sachs downgrade. If you take a look at the GLD, you'll see it's trading at 150.57. That's just about maybe 20 cents lower than where it closed yesterday. So you can't make too much out of it today, but gold did sell off pretty robustly yesterday. We'll see how it plays out going forward. You would think gold would be doing well with all of this money printing, but that is not the case since you have a lot of money coming out of many of the European indexes going into the U.S. dollar, money coming out of Japan going into the U.S. markets and also the U.S. dollar. And then you have, on the flip side of things, potentially central banks also selling gold. So that's what is driving the gold price down. But not that gold is dreadful by any means. I think it's one of the smartest investment vehicles anyone can have in the long run. But in the short term, being driven down by those factors. Taking a look at oil this morning, Light sweet crude is trading lower by 26 cents to $94.38 a barrel. Light sweet crude is the type of crude that we use here in the United States. Brent crude is what they do use in Europe. This morning we'll take a look at the USO, which is a good proxy for light sweet crude, and what you'll see is that this is trading at $33.76. It closed at $33.83. So really, no real big change there. And even in the light sweet crude contract, no real change there. Only down 28 cents from yesterday. Watch the dollar. If the dollar sells off, I think that crude could get a little bit more of a bid. If we take a look at the U.S. dollar this morning, you'll see that the dollar is down about 40 cents. That is going to actually help inflate a lot of the base metal stocks, also help inflate crude. So as you can see, the dollar here today down decently. The dollar pulling back a little bit more. For those of you interested in the dollar, come on over to the chat room or to the research center. I do have dollar levels on the daily chart where I think the dollar is going to make a substantial bounce. But right now it does seem to be in pullback mode, at least for the near term. So we'll see how that plays out. Looking at the overall market today, really we're basically flat. And anytime you have a big up day like we had yesterday, and here's, you could see yesterday's action was pretty robust to the upside, and we've been really flatlining ever since. Generally the next day you'll pause. It won't be such a big up day, but you never know. You do got a lot of euphoria out there, a lot of bullish sentiment going forward, just because of all the money printing that's taking place by not just the Federal Reserve, but every central bank in the world right now, whether it's the European Union, Bank of England, Bank of Japan, the Australian Central Bank. There's just so many of them. All of these banks are printing money out of thin air, and that is inflating the market. So that's what you got to watch for. One of the stocks in the news that I do want to discuss today is Yum Brands. Yum Brands is getting hit today. Pretty decent decline. So the stock still has, a fair amount of support around this $65 level, even $64.50 level. But if it breaks below there, traders should watch the $62.85 level. That will be the next big support that I have on my charts, and then it'll be all the way down to around $59.70. But Yum Brands looks like getting hit on the bird flu outbreak that is taking place in China, and some other factors there. So we'll watch that stock today. That one will be in motion. I do have about 1, 2, 3, 4. I think 4 or 5 other gaps that will be posted in the chat room this morning, so we could get some potential gap trades going in the chat room this morning. And also earnings season is about to really kick off after this Friday, so next week we'll have gap trades galore, in my opinion, going forward. Alrighty, everybody, I'm going to leave it there, short and sweet today. That's pretty much everything we need to know. I will see you all on the charts a little bit later in the day. Have a great day, great afternoon, and God bless.